Hello guys, welcome to Nailing FX and Crypto. Hopefully obvious what we'll be looking at. We'll be looking at Forex and cryptocurrencies. Now my name is Becky. My email address is just here. It's becky@traddictiv.com, so you can email me if you've got any questions. There's also support@traddictiv.com, so you can email us there. Let me just get the disclaimers covered. There we go, top left hand corner. Of course, please read these disclaimers, not just for legal reasons, of course it's important, but also to understand that these kind of videos are demonstrations. Now, we are currently streaming in multiple places. We're on YouTube, Facebook, Twitch, LinkedIn, as well as in our closed coaching community. So we're streaming in different places, some of them for free, some of them is a small monthly fee that people are paying to access the closed coaching community. Essentially what we do is after about halfway through, so normally that's by at least placing one trade, we will cancel the stream or close the stream to the free channels and continue within the closed coaching community. Same content in the sense of same methodology, answering questions, all those kind of things. It's just that you have more time in a closed environment with us if you are part of the closed coaching community. So around about halfway through, we will cut the stream. So it's normally about half an hour or so. Now, just to explain what we'll go through, we'll look at current market environment, closed trades, any open positions, and new opportunities. I'm going to be using 3 different platforms today. So those of you, depending on which platforms you use, at least one of these, if you're a Forex trader, would be something that you should be used to. If not, they are very well-known platforms that would be easy to hopefully sort of copy across if you needed to. Okay, so first things first, I just want to bring you to, let's go to this link, tradewithufos.com/Becky. From this link, you can get yourself a free Trade with UFOs membership, and you'll get a bunch of things for that, such as recordings of sessions that we do and reminders of sessions that we do and things like that. What you can also do down here, once you've got your free membership, is you can post questions here. Now that's great because if you're posting questions in public, then I can answer the question in public, and it means everybody can learn from this area. We can all help each other with our questions and answers. So ideally, that's where you go to post a question. If not, of course, you can email me. Okay, so first things first, let's have a look at trades that we put on last time. So we put on 3 trades last time, which was the 1st of September, and let's see what happened with them. Now, as always, there are different ways you can manage your trade. So depending on how you managed this trade will depend on whether or not it was a break even, a profit, or well, in this case, it was either a break even or a profit. So we placed it on the 1st of September around about 2 p.m. my time, so 2 p.m. British summer time. So it was placed around this time, and it triggered on the 2nd of September, 7:48. So it triggered early in the morning or earlier in the morning on the 2nd of September. Now, just to show you here, if we switch this out, so the 2nd of September, you see on here we had, if I move this out of the way, perhaps it's easier to see. On the 2nd of September, we had, I've lost it now, is it this one? There you go. 2nd of September, we had a thin blue dot. So actually, the autoclimate had changed to a thin dot. Now, what that means is you may have, depending on how early you were looking at the charts, you may have cancelled this trade and not got into it at all. So no winners, no losers, no break even, nothing. You weren't in the trade because we no longer had something lining up. For those of you that don't follow our methodology just yet, maybe this is the first video you happen to have come across, I will explain a little bit later what these dots mean and why we use them. For those of you that do follow the methodology, you'll understand that if we didn't have a thick blue dot for this trade, we wouldn't have placed it. And it also may have been that the EMA also didn't line up. So for different reasons, you may have actually cancelled this trade and not got into it. Now, let's say, for example, you weren't up at 7:48 and the trade got triggered automatically. Well, it got out, if I squidge this a little bit, it got out and hit our safety target at 10:57. So again, depending on how you manage the trade and depending on how active you are as a trader, you may have logged on in the morning and you may have seen that you had unconfirmed climates and therefore you would have cancelled the trade, not got into it. Maybe you were in it and you cancelled it somewhere along here for a very slight profit. You could have done that. Let's say, for example, you placed this trade and you completely forgot about it. You completely forgot that it even existed. Well, then what happened was you hit here our safety targets. That's a 1-to-1 target. And then later on, and I think say the 4th of, was the 3rd of September, you got stopped out. So you made half the trade and then you lost half the trade. Assuming that you completely forgot about it and you never looked at it and you did zero management, then it would be an absolutely break-even trade. No win, no loss, break even. If you had managed it and you'd been more active the next day, you may have cancelled the trade before it entered, or you might have cancelled it at a slight profit. So worst thing that could have happened with this trade is a break even. Best thing, if you'd have managed it, would have been some form of profit along here. Okay, so that trade, either break even or profit. So I'll leave that on the chart actually whilst we just check. I've got a list over here of the next trades we looked at. So we looked at the pound yen. So check that out, pound yen. By the way, I'm checking the different chat boxes. So if you see me looking around like a crazy person, I'm just looking at different chat boxes to see if you guys have any questions. By all means, post questions if you're watching. I will happily answer them. Okay, so with this one, this was the pound yen. So the British pound versus the Japanese yen. Again, we placed this in our closed coaching community on the 1st of September. And here we would have got in later on that day. So later on that day, this was 8 o'clock roughly my time, which was still during this candle. So we still had probability upwards. The EMA was still lining up. So we would have still let this trade hit. So it hit here. And then at this point, it hit our safety target, which was the 2nd of September, around about the middle of the day. Now, you may have, you see in the middle here, between when we got in on this blue candle. In between these bunch of blue candles, we had a thin red dot. If you'd have been looking at the markets at that time, you would have cancelled it on that thin red dot, which would have been somewhere around the break-even mark. So you could have got into this and got out for about break-even. If you'd have completely left it and you'd have done absolutely nothing with it, you would have hit your safety target the next day. And then let's say you just kept it in and you didn't look at it at all. You just left it. You would have then hit your final target on the 10th of September. So again, depending on how strict you are, depending on how much you are checking in on your trades, depending on how actively you manage the trade, would have depended whether or not you actually got out very early on for about break even. Whether or not you got out somewhere around here, perhaps, which was the next time that we had a change in climate at this point, and you got out somewhere for a profit, or whether or not you left it entirely and you actually got out ultimately for the full profit. Anywhere again between break even and full profit, depending on how you manage the trade. Absolute worst that happened was about a break even result. Absolute best that happened, if you actually completely left it and didn't do anything, was a full profit. By the way, that's not to say that leaving your trades and doing absolutely zero management is always the best thing to do. In this case, it happened to be that way. Not always, of course. Okay, and then the last market we looked at was the euro dollar. So let's take a look here. Euro US dollar. So this was placed on the 1st of September. Now again, depending on how you manage your trade, you should have cancelled this. This wasn't a sort of blink and you miss it and you might not have realised that the climate changed. By the time it entered, which would have been the 8th of September, by the time it entered, you've had a whole week to have checked in and realised that you no longer had probability on your side and that the EMA was way further than you want it to be. So had you looked at the chart at any point within the week, you would have more than likely cancelled this trade and therefore not got into it at all. No wins, no losers, no nothing. Let's say that you had left it entirely, you completely forgot you put this trade on, then what would have happened? You would have been entered around about the 8th of September. You would have been triggered into your safety target around about, I guess, the 10th of September. And then actually on the 9th, so you would have been triggered on the 8th, got out of your safety target on the 9th, and then hit your stop loss on the 13th, assuming you did absolutely nothing, which again means break-even trade. So either a cancelled trade or a break-even. So all three trades that we put on from last week, none of them would have been losers. All of them would have been a minimum of a break-even trade. Some of them, depending on how you manage them, you may have actually got some decent profits out of those trades, depending on how you did it. But let's assume worst case scenario, cancellations and break-even trades. That was the worst that happened from the trades we put on last time. So not the best, but also not the worst. That's why we put our safety targets where we put them. So that if we're right a little bit, the price goes a little bit in our favour and then against us, we don't lose, because we've captured a little bit of profit at 1-to-1. So that's how and why we do that. So hopefully that makes sense as a recap of the trades that we put on last time. Okay, so let's have a look now at new opportunities. So what I'm going to do first is come to the economic calendar of FX Street. Now with this, we can see, I'm just going to quickly check the chat box over here, open up a different one, just check that everything's okay. All right, good. So with this, with the economic calendar, what I've done is I've filtered by high impact news, meaning news reports that are coming out that are likely to create volatility, likely to make these markets move. Where it makes them move, we don't know. No one knows. No one has a crystal ball to know what the news is going to do, whether it's going to make prices go up or down. Sometimes it does exactly what you think it would do. Sometimes it does the exact opposite of what you think it would do. So all we want to know is it going to increase volatility? The more volatility we have, normally the greater risk we have. So we can then interpret that depending on our risk tolerance as traders as to what we're going to do. I've then filtered by the major currencies. So here we've got a list of them, obviously the US dollar, euro, Australian dollar, New Zealand dollar, Canadian dollar, pound, yen, and then the Swiss franc would also be in that list, but we don't seem to be having any news coming out. So for us, we do this so that we can look at it and we can say, okay, if we're placing trades that are swing trades, and I would personally say Forex makes more sense to swing trade. If you're swing trading Forex, then you might have trades that last a few hours to a couple of weeks maybe. So let's say you have a trade that's going to last a few days on average. Well then, what's coming out over the next few days that could impact that trade? So for example, today, later on in the day, this is all Eastern time by the way, later on in the day we've got news coming out on the New Zealand dollar. Late at night in the US it'll be news coming out on the Australian dollar. Tomorrow we would have news coming out earlier in the morning US time on the euro and the US dollar. The US dollar again on Friday. So between now and the end of the week we've got New Zealand dollar, Aussie dollar, euro and US dollar that all have news coming out that could impact these markets. Now different ways to interpret that. You could say, in which case I'm not trading any of them. You could say that. You could say I'll trade them but I'll make sure not to do, let's say for example, Aussie New Zealand and pound New Zealand and New Zealand US dollar. You see what I mean? So you wouldn't necessarily double up on some of them. You make sure maybe you're exposed to each of these currencies only once. You may also just say, okay, I'm happy to place any of these trades, but instead of placing my usual risk, I'll place half of that usual risk, or a third, or 2/3, or however you do that. It's up to you ultimately to decide how to interpret this. Some people aren't going to care at all. They just go and place their trades anyway. Let the markets do what they do. So depending on the type of trader you are, depends on how you use it. What I'm going to do is try and stick to, if I can, sort of pound, yen and Swiss franc pairs. We might not find those opportunities. I'll place the trades as I see them, but bear in mind with these 4 currencies upcoming, that might be something you want to be aware of. Okay, New Zealand dollar, Aussie dollar, euro and US dollar. Okay, so what we're going to do now is we're going to come to TradeStation. And we're going to look using these scans to see where we might find opportunities. What I'm going to start with is the daily climates. And what I'm going to do so that I can show you guys different platforms where you might be trading Forex and also where you could be using the apps that we're using. I'm going to show you the major pairs, so these ones on MetaTrader, and then I'm going to show you these ones on TradingView. Ultimately, I'll come to TradingView to place any of these trades, but of course, I want to be able to show you different platforms depending on what you guys are using. Okay, so first things first, if we look at daily charts to start with, then what we have here is we have daily climates are here and here. This means our bigger time frame is daily, which means our smaller time frame is either going to be a 55-minute chart or a 60-minute chart. That's the time frame we're going to be using to be more specific about our entry. The daily time frame is the time frame we're going to be using to help us figure out, are we going to be buying or selling? So over on the left hand side we have US dollar pairs, and what we want to look for, we've got these yellow boxes. These yellow boxes tell us that we have an opportunity that is near, meaning close to current price. So we want to filter by those. And then you might see that some of them say near sensible, long or short. Some of them say near hopeful. We want to get rid of the hopeful ones. We never want to be trading something hopefully. We want to be sensible when we're trading. So let's assume we get rid of those. That leaves us with 3 options at the top there. You also might notice over here we have these boxes. We have red boxes, blue boxes and grey boxes. The red boxes tell us that there's probability downwards on that market. The blue boxes tell us there's probability upwards on that market. And the grey boxes tell us there's actually not enough probabilities either way on that market. So let's get rid of that one as well. So that leaves us with two opportunities to look at. It's going to be either the Aussie versus the US dollar or the US dollar versus the Swiss franc. So let's go and have a look at both of those and we'll see if we've got opportunities. And then if not, we'll obviously move on. We've got a whole bunch of other opportunities we could be looking at as well. So we'll start with those Aussie dollar and dollar Swiss. So let's come to MetaTrader. So we had Aussie dollar. So let's have a look at this. So again, on MetaTrader, you would have your edge time frame as your hourly chart. Now, again, if you are looking at TradingView or you're looking at TradeStation or other markets or something like that, you may use the 55-minute chart. We're going to be looking at the hourly chart for this example because that's what we can see on MetaTrader. Now, MetaTrader, this is MT5, is one of the biggest Forex platforms in the world. So probably you guys that trade Forex are used to this. If not, no worries. We're going to look at different platforms anyway. Okay, so first things first, how would we analyze this? By the way, what I'm going to do is spend a little bit of time just to explain how we analyze this once, and then I'll more quickly go through the opportunities to rule them out before we find something that we're going to be placing. In this case, if we just look at this quickly, in this case, it is unlikely that we'll be placing a trade on this market, just from what I'm looking at, but I'll explain to you why. So we have a thick red dot here on our AutoClimate. That tells us probability is down. By the way, AutoClimate is a free app on most platforms you can get it on, so you can go and download that once you've got a free membership. So thick red dot tells us probability on the way down. Great, means we should be selling. That answers that question. Where should we be selling? That's where we have these guys. Our red UFOs, those show us where sellers are. We want to sell with other sellers because the more sellers there are, the more likely they are to beat the buyers and push price down. So that's why we want to sell, ideally. But we have a third element that we want to look at here. And that's this guy. I'm going to use a different colour. This EMA value. We use the 9 EMA. The reason we do that, EMA, by the way, stands for Exponential Moving Average. So let me just quickly explain that. Exponential. There you go. Moving average. So EMA, it's a moving average, meaning it's tracking price. It's giving you an average of what price has been over the last X amount of candles. In this case, we're using the 9-point EMA, so it's over the last 9 candles. It's exponential because it puts more weight on the more recent data. So basically, it's giving us a moving average that is a number that reflects more recent data than it does older data. Now, why do we use it? We use it because loads of people use it. Loads of people, funds use it. Most retail traders are going to use moving averages of some kind, meaning most people are going to be trying to get in and out of the market at the moving average price. So in theory, if price is below the moving average, which it is right now, so price is here, moving average is here. In theory, if price moves up and touches that moving average, people sell. So you have selling pressure that would come in at that point. That's important because we want to be selling. Context of a downwards climate, we've got UFOs. If that UFO also aligns with the EMA value, then you've got sellers and sellers together for different reasons, which gives you more probability that price comes down. So just to analyze this, the number for the EMA is 0.7349. Okay, it gives us more decimal places here, but it's going to be 0.7349, which is, if I take that, draw that, 0.7349, let me move it quickly. So it would be 0.7349, it's going to be around about there. Okay, can't quite get it. We're close. There you go. So that is where the EMA is. If the EMA is here, but the closest stack of sellers is here, then the two aren't aligning. Therefore, no trade. And that's all we do, is that we're looking at, and we're using apps and we're using indicators, we're using technology and data and statistics to help us figure out where we have probabilities. We want to be trading when we have probability in the first place, in this case, probability down. And then if we're going to sell, we want to sell where we have extra probabilities, which is a place where we have sellers and sellers coming together. And in this case, we don't have sellers and sellers coming together, so we move on. So the other major that we were going to look at was the dollar Swiss. So let's check this out. If not, we'll move on to the other markets and we'll be quicker about it this time as we're going through. Now, by the looks of it, no, we don't have an opportunity here, and that's because the EMA is at, here it is, round about the same price as current price right now. So the EMA, let me move that down, it's going to be 0.9185, which is like pretty much exactly where price is now. That's where the EMA is, and we have no buy orders. In this case, we have a thick blue dot that tells us probability upwards, therefore we should buy. We want to buy with these little green guys because these are where the buyers are. They're all the way down here. The EMA is up here, not aligning, not a trade. So this was our exposure to MetaTrader today, looking at the majors. We couldn't find any opportunities on a daily chart. So what we're going to do is go back to TradeStation, back to the scans, and then we will hopefully find an opportunity on these charts, which are the minor combinations. Now with the minors, we have these top, in fact, if we just highlight the top ones there, because these are the ones that say sensible. And then we don't want this one, so we don't want the Australian Canadian because it's a grey box. We don't want the Euro Pound because it's a grey box. We don't want the New Zealand dollar yen because it's a grey box. That leaves us Aussie Swiss and Canadian dollar Swiss. So let's go and have a look at that on TradingView. So Aussie Swiss, and we want daily. And in this case, we're going to use a 55-minute chart because we can on TradingView. By the way, you might be thinking, why a 55-minute chart? The short answer is it tends to give us slightly better probabilities than the common equivalent, right? So the EMA here, the EMA is 0.7447, which is there. So the EMA is at this point. Our sell orders are here. So we've got a thick red dot, so we would be looking to sell. Our sell orders are here. Now, it is a moving average, meaning if price moves up, so too does the average. Slower than price because it's calculating what's happened before as well. So if price were to shoot up by 30 pips, would the EMA shoot up by 4 or 5? I would say likely. 20 pips it needs to move. Likely, but we don't know. So what I'm going to do, I'm going to pause this one and we'll come back and have a look at it. If the other opportunity that we were looking at isn't an opportunity, then we'll come back and look at this and analyse it in a little bit more depth. If we do have a better opportunity, then we'll take that. So it's Canadian Swiss. Just wanted to remind myself there. Canadian Swiss. Here we go. Canadian Swiss. We do have an opportunity here that's better, and we need to get in quickly. So I'm going to get in quickly and then describe it. So let's do that. So our stop loss is going to be, I will explain this all in a minute. So 8 plus 5 is going to be 63. Our entry is going to be 52. Great. So our first one here is 0.7252 as our entry. Our stop loss is going to be 0.7263. I always do it as a total $100 risk, $50 on one target, $50 on another. So you guys can obviously change that number based on what suits you best. To me, I'm just using $50 on each because it's nice round numbers and easy for me. So 11 pips is our risk, which means 11 pips is going to be where we put our target. So the first target is going to be 0.7241. And let's just check that those numbers are all right. 5263, brilliant. So that's the first target go in. I'm then going to put the second target in, and then I will explain it, and then we'll cut the stream to this one and carry on in the closed coaching community. So I'm going to be placing my second target here, which is going to be 0.7167. Put that in. So same entry, so it's going to be 52, 7252 is the entry, stop loss 7263, and our profit is going to be 0.7167, risking $50. Okay, let's just put that in. Brilliant. So now we put the trade in, let me just stop and explain it for those of you that might have no idea what I've just done. For those of you that follow the methodology, hopefully that makes sense to you as to why we put it on. So we have on our left hand side, daily chart, bigger time frame. This is the time frame that helps us decide whether or not to buy or sell. We have this free app here, AutoClimate, that shows us through the dots where we have probabilities. If it shows us a thick red dot, that's telling us probability downwards. So we should look to sell. Then what we want to do is sell where we have sellers. And again, we've got these little red guys here, got the prices on the right hand side, these red boxes, showing us where the sellers are. So I want to sell with them, but I also want to, or I only want to sell with them if it also coincides with the EMA value on the bigger time frame, because other people are going to come and sell at that value anyway. So sellers plus sellers gives us greater probability to the downside. Now the EMA value is 0.754. So the EMA value, if I was to draw a line, the EMA value is here. So the EMA is inside that UFO. They are combining together at around about the same price. That's why we place that trade. So probability down, selling with sellers where other sellers are likely to be. Sellers plus sellers plus sellers, more probability. Great, that's why we want to do that. Now the way we place our targets is we have one target that's at 1 to 1. So one target that is really close. Reason for that is because if price were to come up and then drop a little bit and then go back up against us, then we would make half of the trade and then lose half of the trade, break even. Make 50 bucks, lose 50 bucks, no problem. Now, if we're right and price really does come down, this second green line here is where we're taking our profit target. Let's say price comes in and then drops. Great, we'll take some profit here and some profit here. Now the overall profit would be reduced because we took some of it early on, but we do that to protect ourselves against being wrong. Now, why did I pick that place? So let me come across here. We have here on the left hand side on our daily chart, remember we got into this to sell because the climate on this time frame tells us probability is downwards. Now what's going to stop probability downwards? What's going to stop price from going down? Buyers. It's the only thing that can stop sellers is buyers. So here we have a green UFO on the bigger time frame, bigger stack of buyers. So we want to get out just before that stack of buyers, which is why we placed our target there. Now the numbers, the reason why we chose those numbers. So we have here, I know it's harder to see because now I've put the orders on, you've now got extra boxes, but these red boxes here are the numbers that show me what the UFO numbers are, meaning between those prices exactly is where we find sellers. So 0.72521, that was the lowest place that we found sellers. So my entry was 0.7252. I rounded it down to the closest pip. The top number, 0.72573, that was the furthest place that we found sellers for that UFO. So what we did with that is it was 0.72573. We rounded it up to the closest pip. Our sell orders should always be rounded up. Our buy orders should always be rounded down. This is a stop loss. Our buy order should always be rounded up. Our sell order should always be rounded down. And because this is a stop loss of a short, it's a buy order. Therefore, it needed to be rounded up. So it was 0.7258. Is what we would have rounded it to, and then I added 5 pips of wiggle room just to give it a little bit of space. So that's how we ended up with 0.7263. Now our first target is 1 to 1 away, so it was 11 pips between entry and stop, so 11 pips between entry and target, easy. And then the second target of course was taken from this UFO. This UFO again, if we sell to get in, we buy to get out. Buy orders need to be rounded up. This UFO started at 0.7164, so I rounded it to 0.7165, just rounded it up to the closest pip, and then added 2 pips to counteract the spread, so 0.7167. That's how we ended up with those numbers. So that is the Canadian dollar Swiss franc. Now the Canadian dollar was one of our, oh it wasn't, oh yeah, we've got something, oh hold on, where were we? Nope, this one, there you go. Canadian dollar's already come out, so actually we have no news on the Canadian dollar and no news on the Swiss franc coming out this week, so also great. I'm glad that worked out that way as well. So we'll check on that next time to see what happens with it. You would go to tradewithufos.com/Becky, get yourself a free membership at the top there, and then come down and ask a question here. That's interesting. I think I've just been cut to the YouTube one. Or have I? I'm not sure. I think I've just been cut to the YouTube stream. I'm just going to double check. It looks like it. Okay, it looks like it's fine. No problem. Sorry for interrupting there. I had a message pop up to say that I'd stopped streaming, but I'm looking at it and I am still streaming. So we would be coming here to ask questions, because that way the question is in public, the answer is in public, I can answer it, other people can all learn from this area. So ideally that's where you'd come to ask questions, or you can email me, becky@traddictiv.com. I'll be back next week for the next Forex session. We've got a sharpening session this weekend as well. So join me there if you need help with those things, and I'll see you next time on the next session. I'm going to now cut the stream to the live streams, and I'm going to continue in the closed coaching community. So those that are there, wait for me. I will be just 30 seconds or so as I cut the live stream, and I will be with you in a second. So thank you guys for watching. Take care. See you next time. And those in the closed coaching, see you in a second.